Okay, welcome everybody. I know we still have some people signing in, but we'll go ahead and get started here. So welcome to our second edition of the Presidio Perspective. Hopefully those of you listening were able to tune in or watch or listen to the replay of last week's webinar. Last week, obviously, we talked a lot about the bear market crash that we have all experienced over that first 30 days. This week, we experienced something else. So last week, I was hopefully giving confidence to those tuning in that this is something that we anticipate, and that bear markets and recessions are part of investing. Weeks like this week are also something that we should anticipate and get used to experiencing. So we want to, last week we were telling you, don't get too nervous, don't panic. This week, a little bit more of the opposite, unfortunately. So that said, we'll enjoy the wins as they come. There has been a historic $2 trillion stimulus package and relief bill that was passed that's going to give some much needed relief to our economies, local governments, hospitals, food banks, infrastructure, and American households. And so it's really important that this bill got passed for the stock market. It wasn't without its political views, of course, if you were tuning into the news and watching that play out. But it did get done, and that's going to really help out what we're dealing with right now. And so we'll see what that impact is on the stock market as it unfolds. It was interesting in the bill, there are some items in there that are going to create opportunities for us in financial planning. So, financial planning we talked about last week. And of course, if you've spoken with me or attended our class or are a client of the firm, know that we talk about the big three, and that's inflation, taxes, and market crashes. So market crashes happen. What are we doing to combat inflation and taxes during these times? So there might be some opportunity here. So there were some of the bill addressed IRAs, and so one, it extended the deadline for IRA contributions from April 15th to July 15th. So those of you making deductible or non-deductible contributions to IRAs have some extended time to do so. It also waived the required minimum distribution for 2020. So we know we have a number of clients that are in the required minimum distribution phase of their financial journey. And so that's going to be a kind of boon for our tax planning for this year. So clients that have to take a required minimum distribution or had to take no longer have to do that. If you took your required minimum distribution early, and did so within the last 60 days, it's not considered an RMD any longer, just a normal distribution out of a retirement account, which would be subject to the 60-day rollover rule. So you may be able to put that back to an IRA under that 60-day rollover rule. If you took a distribution because you thought you had to take an RMD longer than 60 days ago in the very beginning of the year, we might still have an opportunity to put it back. I know that the tax community is requesting guidance from the IRS on how they're going to handle that, so there's more to come. So also affected individuals from the current coronavirus can waive the 10% early withdrawal penalty of up to $100,000 of distributions from retirement accounts, IRAs, 401ks, etc. So if you aren't 59 and a half yet, aren't in that normal retirement phase distribution, you could access those accounts early and not be penalized from those. So, what are some of the tax planning opportunities that come to mind? Roth conversions obviously are something that we talk about a lot. In inflation, taxes, market crashes, how do we address the tax problem? First of all, understand that we have a lot of taxes that we have to pay on any tax deferred accounts. We need a strategy of how we're going to pay that. So, if you've seen this before, we've gone over it a lot before in our class and coursework, but when do we want to take distributions out of a retirement account? Well, if I own shares of stock and those shares are lower, and I could distribute them out of a tax deferred account and into potentially a tax-free account and have them recover in a tax-free environment, then that would just spell out to me a very big winning scenario. So, we're going to get to some of the do's and don'ts of what we can do in a bear market. And so this has kind of opened up some additional opportunities for us from a financial planning standpoint. So good news there. Here's some bad news for you. So I don't know what the future holds. My crystal ball is broken. It always has been. But, we are preparing for a much longer term bear market and what we're dealing with. So, here I just show a pretty depressing slide of the Dow 30 components, which are showing you in red of kind of what we've experienced from the peak to when we've seen the drawdown. And that's compared to the 1929 stock market crash in blue and the 2008-2009 financial crisis here in black. So, bear markets typically will get into the duration, but last a lot longer than 30 days. And so, we are likely going to have to experience this for quite some time. And it's going to be pretty important on the moves we make and don't make during this time. But as you can see in lots of these bear markets, there's lots of really good days and shots in the stock market, lots of bad times as well. So I would just, caution everybody to expect lots of volatility from the stock market. You'll likely continue to see, and my anticipation is, the worst days on record, the best days on record, the worst weeks, the best weeks as we get through this. I'm still long-term bullish on the American economy and the U.S. stock market. There might be ways in which we will emerge from this, perhaps even stronger and better than before, as our world is kind of forced to utilize the new technologies of the day that really can increase productivity in a very meaningful and significant way, which would be very good for the labor markets and stock markets and those that experience that. So, long-term, our view isn't changed where this is all broken. We don't want anybody to think that or pay attention to that. But for a short period of time, and I mean that relatively, in the matter of months, just expect to see a lot of volatility as we go through this crisis. Again, looking to the past, these past bear market recessions that we touched upon since 1950 that we talked about last week, when we look at how long it takes for the market to finish its drawdown, meaning from the very top to the very bottom, on average, we're talking about a 21-month period of time, almost 2 years, the fastest of which was 15 months. So that's just the average. And look, no recession's the same, no bear market's the same, and of course, no one can predict the future. But we should get ready and anticipate that this isn't all going to just right itself within the next 30 days. There's a lot of things for us to figure out as a nation, as a globe, as an economy, after this virus seems to be contained. The recovery period on average takes about 3 years. So you're looking at, on average, about a 5-year time span of 56 months on average of the stock market to get back to where it was at its original high. The fastest here, it looks like, was 21 months. So, still almost 2 years in the fastest period to get back to where we were on February 19th. Now, again, I have no way of knowing what the future holds, but we should just look at this and understand that we're in this for the long haul. And as good investors, that's where our focus should be. So, we're 1 month in. We'll see. We'll continue to update this chart as we go through, and we'll see how long this one takes, and it'll be a new data point, of course, that will look for future bear markets. So again, we just probably have some time. We're 1 month in. We don't know what the future holds, and of course, there's other plot lines and other recessions I could put on here, but this is looking like something that probably has a few more innings to play. Somebody last week asked if we're still in the first couple of innings of this. I said, I'm afraid that we're probably listening to someone sing the Star Spangled Banner right now, and that perhaps we haven't even really seen what's going to happen. So, I don't want to invoke any fear or panic, but, going back to a slide I shared last week, looking at our Oracle of Omaha, Warren Buffett, reminds us that we simply attempt to be fearful when others are greedy, and to be greedy only when others are fearful. And, it's interesting, 2 weeks ago, we fortunately didn't have a lot of calls of clients asking to get out of the stock market, which I'm very proud of. Obviously there was a good amount of unknown and uncertainty and unrest, which we're able to address, since we do have the financial plan for everybody that addresses these types of things. And this week, some of the calls and emails I got were of fear of missing out, the FOMO. Fear of missing out of the time to buy in, or the time to, they miss the bottom. Again, just, looking at these things, I don't think that that's where we are. I think that there's probably more to come. I have no way of predicting what the future is, but, I think that there'll be buying opportunities ahead. And if I tuned into the news this week, wasn't a lot of fear out there. Wasn't a lot of fear in the stock market. Maybe not a time to get greedy. So just listen to the Oracle of Omaha there and seeing what he has to say about it. So, in times like these, I think it's really important to focus on what we can control, and what are the actions that we can take. What can't we control? Number one is our spouse and our children, of course. Probably equal to that is the stock market, right? We're not going to be able to control the stock market. We're not going to control our politicians. We can't control this virus. We can't control what's happened in the past, and we're certainly not going to be able to exhibit our control of what happens in the future. So, it's best to address the only thing that we really can control, is the only two things that we have in this world that we have any control over is our time and our money. And it's best to focus on that and come up with our strategy. So, from a time standpoint, what can we do during this financial crisis? Well, one, I would suggest we could probably limit our news cycle intake. So hopefully many of you are, but we need to have a certain amount of information as we deal with this crisis. I'd probably recommend you get an article or two, an outlet, but try to limit your time in which you're plugged into the news media. Every time you click an article or an email, somebody gets paid. So when we're on the financial websites or we're tuning into the news, that is a marketing engine that is being fueled from having you tune in. So, and it's very limited. I mean, I just find it's looking back at the last 24 hours, looking forward at the next 24 hours, and focusing on a lot of things that are just completely outside of our control. So, getting some updates to find out where we are and dealing with this crisis is good. We want to stay informed, but just be careful about how much it could really play on our psyches. We're probably not making large purchases, taking vacations, remodeling the kitchen. You might want to put some of that stuff on hold. And of course, you probably have to, taking time to connect with people. I was talking to Cheyenne here in our office today, remotely today. We were talking about how much more in contact we actually are with our friends, our family, our clients, and how much it's really increased the connectivity we've had with a lot of folks. So, as we're isolated in our house, hopefully we're taking the time to do that, practicing good health habits. And, with the free time we have on our hand, make sure we're taking the time to better understand these new technologies. This is something that we've started to utilize a lot in our practice over the last few years. Trying to switch over to e-statements, try to switch over to more web-based meetings. Most of our clients have acclimated to that. Some of you might still want to have your paper statements in the mail. You might always want to have a face-to-face meeting. Understand that the world in the future is going to be a little different. And if you're, uncertain about these different technologies and how they're going to be utilized, know that they're likely here to stay, and something that we should embrace. As far as our money, what are some of the good moves we can make? Well, one thing we might notice is that we can update our spending and withdrawal strategies. So I'm not suggesting that anybody should necessarily cut their budget. Of course, meet with your financial planners to determine whether you need to do so. If you've put together a financial plan, then the bear market or market crash shouldn't ever cause you to have to cut your spending. That would have been, an unwise financial plan. So, but what you'll notice is that, if we created a financial plan together, we probably had a pretty hefty allocation to things like a travel budget that you're likely not going to use this year. So, if you are on a withdrawal strategy and taking out, so $4,000 or $5,000 a month for your retirement and finding out that, your overall spending has greatly decreased, and that's going to continue for a matter of months, you might want to decrease that withdrawal rate and better use that cash that your portfolio is generating for future buying opportunities. Roth conversions I touched upon, again, a great time to look at that in a bear market. Selling out of an IRA during the bear market, buying back into a tax-free account for the recovery would just be fantastic. If you looking at assets, liabilities, income, expenses, there might be new refinance options for you to evaluate as far as your mortgages, extending the term or lowering the interest rate to decrease your monthly cash outflow. Review your financial plan. For clients of Presidio, you likely feel like you have a good understanding of what your plan entails. If you don't have a financial plan, if you're new and viewing this webinar, perhaps you will now understand the importance of having a very detailed financial plan that gives you an investment strategy so that you can know what your time horizons are on your investments. Folks should have an understanding of if their stock accounts are down, is this money that they don't need for 15 to 20 years, or is this money that they were hopefully going to use in the next year or two heading into retirement? So very important to look at that now more than ever. So focus on what we can control during these tough times. So again, we're here to serve as your personal CFOs. I hope that, you understand you can't control the stock market. And I hope you're not spending all the time, focusing on what it's doing or watching it on a 24 hours news cycle. You've offloaded that worry to us as your personal CFOs and investment fiduciaries. So you can, allow us to worry about the stock market for you. Hopefully you've seen the defensive moves that we've made to protect your capital and have plans to redeploy that capital at opportune times as we go into what we might think is a lengthy bear market. So we're here to answer any questions that you have. Make sure to get in touch with us if you need to. I appreciate all the support and the continued client introductions and referrals. So, if you know anybody who wants to attend these future webinars, please forward them on to friends, family, colleagues. I think a lot of people could benefit and use this information that we're delivering. And I promise we're going to get better going forward at giving you a little bit more heads up. So I appreciate your patience with working with us. So we'll give you a little bit more heads up as we go through and bring in new guest speakers and lecturers for our upcoming webinars. So if you're new, you can find us at presidiocm.com or email us at info@presidiocm.com or give us a call. You'll talk to a team member at 858-461-4959. You request an appointment directly on our website, select the remote screen share, and we'll be happy to talk with you. Appreciate everybody tuning in here with us. And our promise is to get you more heads up on the next webinar for episode number 3. But I wish all of you guys a wonderful weekend. And again, thanks for taking the time out of your busy Friday nights to spend it with Presidio. You can get back to your Zoom cocktail hours. I know that we had a couple of clients tell us they couldn't make it tonight because they had a scheduled Zoom cocktail hour. So happy to see everybody making the adjustment, and our thoughts and prayers are with you. Hopefully everybody's staying safe and in good spirits, and we're here to help as you need us. So thank you, everybody. Wish you a wonderful weekend, and we'll talk again next week. Thank you.